I've been doing insurance since 2003. I have a master's degree. It's an MBA, but I had the opportunity to spend a lot of time in Florida State's risk management and insurance school and took some classes from there where we were doing modeling of catastrophic stuff. So from an insurance perspective, I mean, obviously our hearts go out to those that have lost homes and and worse, right? We feel, our hearts go out to those that are suffering right now. But from an insurance perspective, it's kind of interesting to see how things are unfolding and how things will unfold. As far as the state of the market, it's been really interesting. It's a hard market, and that's defined as raising premiums and limiting coverage, right? So we are seeing policies that are significantly, I mean, 200% more than what they were 4 years ago. And from my perspective, and I don't know if my perspective is the end all be all of this, but the insurance companies, because of the inflation in the market, were unable to predict their losses. The losses were greater than what they thought they were going to be, primarily because of inflation. And because of that, they started losing money. Several years ago, in the state of Arizona, they were losing 10, 12, 14 cents on every dollar that they took in. And when you start to think about the profit, on a per dollar basis for an insurance company might be 1, 2, 3 cents. Their ability to predict their losses is super important. And when they lose control of that, their options are to pull back, insure less, and raise rates. And that's exactly what's happened. And it has been drastic over the last couple of years. And so we've seen worse coverage, higher premiums, and really difficult underwriting where a lot of companies are not wanting to insure a lot, which seems weird given that that's what they do, right?
Right. So what in Arizona first? One, is there a percentage of how much insurance has increased, and what areas of Arizona have been affected the most, where there's no policies or they're getting taken away?
Yeah. So every carrier is a little bit different, right? Every carrier basically stands on their ability to underwrite a particular risk. And so when you look at a house that's brand new and has these characteristics, essentially what's happening is these companies are looking at a home, saying, okay, these are the characteristics, this is how it's being used, and they put it into a box, right? And and that's the rate for that box. And a lot of it has to do with the home, but a lot of it has to do with the individual. So when you say how much have they increased, well, that's a difficult one, but across the market, 40, 50%
Wow.
is not, that's not uncommon. And what's interesting is that, as an independent agent, we represent different companies. And so we see what's happening. And sometimes we'll have a carrier that has a problem. And so they'll raise their rates, but there will be other companies that are less, they're still making money. And so we're able to see that. But what we've seen is all carriers are raising rates and in a
Got it.
drastic way. So much so that, a person could call and say, hey, my rates have increased. And the answer literally might be like, yeah, but not as much as everybody else. Yeah, it's a hard market for sure.